TJ says, "Hi, Rich Habits. My name is TJ. I've been watching your podcast for a while now, and I've learned a lot from you guys. I really appreciate the content. I'm facing a bit of a dilemma with how uncertain the market is right now. I'm 28 years old, and I understand that I have a high risk tolerance, and I've been consistently dollar cost averaging into the stock market, but I've also just been paying the minimums on my credit card debt each month. Here's my question. During times like these, would it make sense to continue to pay the minimums on my debt every single month and put the rest into discounted stocks? Am I crazy for thinking like this? Or should I focus on paying off my debt first, even though the market feels like it's full of bargains right now?" What do you think about this, Robert?
I think TJ knows the answer. You can't out-invest high-interest debt. We've been saying it forever. I've been saying it for decades. You can't do it. And right now, you look at the stock market, yes, there are a ton of discounts. I love that. All of us can make more money because this is when the real profits can be made. But you have a problem, and that is the high interest credit card debt. In my opinion, you shouldn't even be thinking about anything until you knock those out. Because yes, are you going to miss some upside potentially in the markets going back up? Sure. But you're also going to be continually missing upside if you're paying high interest debt, because look at it this way. Right now, the markets are doing poorly, but your interest on your credit cards is still 25, 30, 32%. So you need to look at that as, if I pay that off, I just made this money back because you got rid of that debt. It's so important. We see people every day in our DMs. I do one-on-one calls to help people where they'll have 100,000 invested over here and 80,000 in credit card debt. They're making 10% on their investment, which is great, but they're still paying out 30% over here. Doesn't make sense. I know it's tough when you see money in your bank account and you don't want to give it up to pay off a high interest debt, because then you're like, well, I don't have any money now, but I paid that off. You have to, though, because you have to get yourself to a level playing field where you don't have all the high interest debt floating around, because otherwise you'll never get ahead.
I've got nothing to add. I don't think I could have said that any better myself.